Hey there, Wall Street winners. It is Saturday, March the 15th, and I hope you did well on Friday. The markets had a great day. They didn't make up their losses for the whole week, but they certainly turned things around on some positive sentiment. I hope you took your profits, though, because I'm expecting this week to be pretty bad and to turn negative. I don't mean that in a pessimistic way, just mean it in a realistic way. And the reason for that is Monday morning, we're going to get the retail sales numbers for February. And based on all of the information and data I have been consuming, the majority of consumer expenditures come from the middle and upper middle class in the US. That same group is the same group typically that invests in the stock market and has just experienced a 10% correction or more in their portfolios. So they are reluctant to spend. If we look at the University of Michigan consumer sentiment numbers, which came out Friday, they're showing that all consumers in the US, regardless of demographic, are cautious and pulling back on consumption and personal spending. And that to me is a key leading indicator going in to Monday's sales numbers for February, retail sales numbers for February. So I think that is going to cause a pullback in the market and a bump to the VIX, which dropped down to 21.77 to close for the week. So that's the first thing. Then bright spot, we've got on Tuesday and Wednesday, we have NVIDIA's GTC, their global conference in, I believe it's in San Jose, but it's in, I don't know if it's in San Jose, but it's in Silicon Valley. I think it's San Jose. And this is basically the World AI Conference. And um, the CEO of NVIDIA is going to be speaking on Tuesday in a keynote. I expect that keynote to be very upbeat. And I think that we'll see a bump in NVIDIA stock on Tuesday, possibly into Wednesday. But again, if you're buying it right now and don't hold it, I would buy it and sell it on a profit because it's likely we're going to get some more bad news towards the end of the week. So then, as we progress through the week, we're going to hear from US home sales. And I'm pretty certain that based on the drop in spending and consumer sentiment, we're going to see that new home sales have declined. And if that's the case, and what goes into new home sales is softwood lumber, and most of softwood lumber in the US comes from Canada, and we know that Donald Trump doesn't think highly of Canada right now, wants to annex it as the 51st state, and wants to put tariffs on a lot of goods. It would be not out of the realm of possibilities to see Donald Trump put a tariff on softwood lumber, and it's probably going to start at 25% because that's a percentage that he really likes. And it could double if Canada retaliates with reciprocal tariffs. So we'll see what happens there. That could also happen on Friday because one of the big US home builders comes out with their quarterly earnings announcement on Friday, and we'll see if it ties in with that. But either way, that's going to happen. And then on Wednesday, we're going to have the US Federal Reserve Chairman Jerome Powell speak. And he, unfortunately, kind of has his hands tied right now because all data, which is historical data, past data, he can't predict the future, so he has to go on past data points, PCI and PPI, CPI, PCE, all those numbers are suggesting that the interest rates are where they should be for current inflation levels. Now, unfortunately, the threat of future tariffs isn't something that the Federal Reserve has a real mechanism to factor into their analysis. So again, they can't go forward and predict what's going to happen with said statements of things that are going to occur on April 2nd. They just have to wait for that to occur and then respond to that. So I don't think we're going to see interest rates move, which I don't think is unexpected, but it may actually be beneficial to see them come down in the US right now. And I think that's what honestly Donald Trump and the administration is hoping for, is a rate reduction. So So if we don't see a rate reduction, I think we're going to see a lot of Truth Social posts around the need to have Jerome Powell replaced or step down or removed from office completely. So we'll see what happens there on Wednesday. Then on Thursday, we've got some quarterly earnings coming out. And one of the sectors reporting is transport. So FedEx is coming out after market close on Thursday. They're going to report. Transport has been in the tank recently because of the potential impact that tariffs would have on transport. FedEx has been doing a great job at cutting costs recently. But I don't know if a drop in e-commerce and overall shipping is going to serve them well from a future forecast and even current revenues perspective, especially if we see retail numbers down on Monday. I think you can translate that into e-commerce and online numbers being down as well. So I think FedEx could take a hit. It might be a good opportunity to buy that company, which is a very solid company, at a deep discount if it does drop on earnings release. We'll also hear from the likes of Micron and Nike. So Nike's been in the tank as well for the last year. New CEO now, been in place since we'll say mid-October, that time frame, and an old executive from with a lot of history in the Nike organization. If they come out with some positive announcements, I really do think that that stock has the potential to take off and to move forward. But again, it could be impacted by tariffs. So future forecasts, everything taken into account, could be a bit of a crapshoot on that one. And then you've got Micron, and Micron has a great deal of resources out in Boise, Idaho, and in the US, headquartered in Boise, been to their headquarters, fabulous facility. And I think they're going to have some phenomenal numbers based on what we've heard from other semiconductors that are tied into that AI space. They've also received a huge chunk of funding in the billions, I think 6.9 billion, if I heard the number correctly. From the US government, particularly the Biden administration and the CHIPS Act. But what we heard last week from Donald Trump was he hates that whole program. He thinks it's ridiculous that you're giving money out, the government, the US government's giving money out to private companies, public companies, in order to incent them to be in the US, especially when they're already here. So whether you agree or disagree with that, it sounds like Trump is against that. And he attempted to cut US aid to contractors that had already done and delivered the work and services. So it is potential or potentially likely that he could say, no more funding, we're cutting it off, maybe even say you have to pay it back or if there's a penalty or something of that nature. So we'll have to wait and see what comes out around those conversations after hours on Thursday. And then we get to the end of the week and we'll have to figure out where we are. On the end of the week is the day in which we get the numbers from one of the largest US home builders. So we'll see what their future forecast looks like, their sales and revenue. And again, with where we are with consumer confidence, I'm not assuming that's going to be super positive. Hard to come up with a really positive future forecast when all leading indicators are pointing to a slowdown. And that's part of the challenge here with how this has been done, because I don't disagree with a lot of the objectives that the new administration has, but the way in which they're trying to arrive and achieve those objectives has been a little brute force. And with brute force, sometimes comes a bit of pushback or a fight. That could be a legal battle. It could be a economic battle in terms of tariffs on tariffs, so reciprocal tariffs from other countries, which we've seen. It could be incentive for companies on the positive side to move to America and start producing. But one of the other things that I continue to hear from the administration, and particularly the Commerce Secretary, is they want to bring manufacturing back to the US. But one of the things that he has also said, now he hasn't said this as often as other statements, is a lot of that manufacturing will be done through automation and robotics. So, although they're bringing manufacturing back, they're not really bringing jobs back. They're going to bring some high paid jobs around automation and AI and robotics, but not your average manufacturing, menial labor type of assembly line type of job. Those jobs are going the way of the dodo bird. I say that, but the woolly mammoth is being brought back through another company in California who's come up with a woolly mammoth mouse. So maybe the dodo bird will reappear at some point in the future. But those jobs are going away. And so I think there are a lot of um, not so truths being shared. So we'll call them lies. No, there's a lot of lies being perpetrated by the administration around what their objectives are, and they're really doing a lot to mislead the public, but the public isn't falling for it. They're all the majority of Americans are nervous about what tariffs are going to do, the price increases they're going to have, how it's going to affect the economy. They're worried about their jobs, which weren't as big of a concern, with Elon Musk wielding a chainsaw in the White House talking about cutting government jobs. That's great if you're cutting waste, but if you're just cutting jobs and not removing the waste and changing the processes, are you really achieving the end goal that they're striving for? And with that comes the fear of impact to other jobs. So some of the jobs in the government that are being cut are the jobs that provide the money from the CHIPS Act, which was signed into law during the Biden administration. Now, if half of or all of the people responsible for that program are gone, will that funding actually get out? And if businesses like Intel, which is an American company, or Micron, US-based company, have made business decisions and investments based on those guarantees and the government incentives or government investments, then how does that factor into their decisions? And does that require them to then look at layoffs and firing of people, or simply not hiring if they haven't hired them yet? Um, it has a ripple effect throughout the entire economy. And that whole volatility piece is what we're in the middle of right now. And until we can unravel that very convoluted ball of yarn or wool or string that's tied up in multiple knots and multiple circles, we're not going to have an environment where investors want to invest and feel confident in investing and see a market that will move forward and upward with stock prices appreciating. So again, I highly stress, if you're concerned at all about your capital and the preservation of your capital, go to a money market fund and or buy up an option like a put, or do some short selling if you're more sophisticated on either index funds or on individual stocks. One stock that I truly believe has had a run up over this week is Tesla. And I think that we're going to see horrific outcomes for that company in terms of earnings announcements, revenue announcements, and future forecasts going forward, even though the White House now sells Teslas based on the 45 minutes that Donald Trump spent talking about how valuable they are and what great cars they are, even when he said 2 years ago that they were pieces of crap, and electric cars were garbage and no one needs them, and they should stop manufacturing them because gas combustion engines are the way to go. So obviously not a man that sticks to his convictions, but nevertheless, that's where we are in the markets today. Good luck in your investing, and I do hope you can preserve your capital and still make some money this year in your trades. We'll talk to you again soon. If you like these videos, please hit the like and subscribe button.